Hello everybody and welcome to the Middle Class Investor. It is January 11th, 2015 and we are now solidly into 2015. We've got a chart of the 10-year U.S. interest rate and we closed actually below, you can see right here, 1.971%. So the interest rates continue to go lower. This support area, though, is in fact holding. Will it continue to hold? I don't know. If you look at the RSI is still kind of curling down, so maybe interest rates go lower. If that's the case, then the next area would be this 1.5%. So continue to watch that. I still think, if you've got bond funds, you're making money as these interest rates go down, but I think there's major risk to the upside, i.e. the downside if you hold a bond fund. So we'll continue to watch it. I mean, they're not going to go just straight up, so we're going to have some time, but I think for sure, as we trickle down into this area, I mean, it's possible that they make a new low, but man, I don't know. That's pretty low. The lows currently are 1.39%, and that goes back to mid 2012 in July. So could make a new low. I mean, the market can do anything, so we'll just keep watching it. But this is an area of a potential source of risk that listeners could have in their 401k and IRAs, and I just want to keep calling attention to it. The Dow and the S&P basically look the same, although I've got a little pattern drawn on the S&P, so let's look at that. I don't know, how good the pattern is, but it seems to be staying within it, and so we have kind of this rising wedge inside here. Starting with this move up, you could extend this to this candle here. So we've had an up, a down, an up, a down, and now it looks like we're going to be going back up. And I would look for the S&P to get somewhere in this zone here. I mean, we can let's draw a little rectangle here just for a resistance area. A lot of times we're drawing support areas, but this particular chart, as the market's moving up, we need to also be drawing resistance areas. So put a resistance area right about there. So that box starts at about, and these are zones, okay, so these aren't hard areas, but starts at about 2105, and I think if it got much above 2135, we'd have to say that we're breaking out above that resistance area, and we would wait for a pullback and then another move higher. So let's look at the the euro US dollar. Continues to be weak, although this line appears to be holding. I don't know why my zoom is not working. There we go. So we pulled back into this zone, and looks like it's trying to bounce. I think if it does bounce, you're looking to an area right around here, around the, the 1.26 area. Now, let me zoom in here on this last week, because that's weird. Oh, it's moving right now. That's what the deal is. So that's this week. So this, let me go to a daily chart, and you'll see what I'm saying. We've started a new week already, so the new week started right here on this candle, this second to the last candle, and this is the current candle, and you can see it moving back and forth there. So again, it looks like the euro wants to bounce. We'll see. There's no guarantees of that. No guarantees of anything, in fact. Let's look at the volatility index. We had this little trend line here, and just to remind everybody, the volatility index try to use it as like confirmation. So if the market goes up, that means the volatility should be coming down. If the market goes down, that means volatility should be going up. So sometimes you'll get a situation where volatility is up and the market's down, and that is revealing something about the market that we should be paying attention to. But for the most part, it moves inverse to the market, and you can see that we had a small collapse in volatility. That might continue this week, but we would expect this line or this trend to more or less hold. You can see that we had a breach here, but we're still drifting upwards, so would expect that to continue. Let's look at Germany. Germany seems to be holding this trend line. It pulled back right to it last week. Let's zoom in on that. It's amazing how the market does this. This is it just kind of shows how everybody's looking at the same thing. But you can see this trend line that we had here, and you can see the market. Yeah, it went below it, as did it here. But a lot of times I try to draw the lines through the closes or near the closes, and that's why. And even though it breached it, it looked like it closed right at the line. So I would look for Germany to be bouncing this week, to make a move up in this direction. And, as the markets continue to, they all kind of look very similar to me, although the international markets look a little weaker than the U.S. market, but they all look more or less similar. Japan continues to trade in this range, although it looks like it's wanting to test the bottom part of this range, and it could break down through this range and proceed lower. We'll just have to watch and see. The United Kingdom looks weaker because it broke this trend line, but it looks like it wants to bounce. I mean, we've got kind of a double bottom here in a support zone. So you might look for the UK near term to bounce. Maybe make a, let's see how far that would be. If it bounced to, say, right into this area here, that'd be 2.5% or so. So you might look for the UK to bounce 2.5% from here over the next couple of weeks, maybe 3 weeks. What else do we have? The global Dow is something that we've been looking at. The U.S. markets make up about 40% of this global Dow number. So the interesting thing about that is the U.S. markets have been going up, and yet it looks like the global Dow is trying to reverse trend. So what does that tell you? That tells you that some of the international markets are weaker than the U.S. markets currently. And we've still got the support zone drawn here off of this low here, and we'll see if that holds. We could bounce from there and then go higher. If it breaks down below here, then that would be yet another lower low. We've already got a lower low here, right? So we got, let's zoom in on this and just take a look at this, because the global market, the markets are so interconnected now that it really just doesn't make sense to not look at these together. So you can kind of see, I mean, those are basically the same highs. So let's just call that a double top. The market ran up, ran down, ran back up to the same spot, and then made a lower low. Okay, then it made a lower high right in this area, right? And this, if it comes down into here, this would be a lower low, but would also be in a support zone. So what we would look for to do here is, so if this was, let's concentrate on this low, and then if it came in here and made a lower low, then what we would do is look for it to come up again one more time at a lower low, and then maybe look to exit our international positions in this area, because what this is telling us now is that the trend is changing, and we don't want to be on the wrong side of the trend. So this is kind of how you do it. You as long as the trend is in your direction, you want to stay with the trend. But if the trend starts giving you information like this, then the next bounce up you want to look at thinning out your positions or hedging them, or maybe sell some calls above the market. There's a lot of things you can do, and maybe someday we'll talk more about that. I don't know. If anybody out there wants to talk more about that, certainly let me know how you can generate income off of your some of your holdings. Maybe we'll do that here. This particular thing I'm in is a paper trading account. You can see here I have this is an open position on AT&T. We're short 300 shares of stock, but we could enter some positions on the SPY and sell calls against them. We could show you how to do that here. If that's something you want to know how to do, just give me some feedback, and we'll take some time to do that one of these weeks. Or maybe what we'll do is we'll pick 1 week out of the month and do that, or we'll come up with some sort of system like that. All right, let's look at I want to look at gold, and I want to look at the dollar. The dollar, as you might know, probably looks a lot like the inverse of the euro, which it does. And you can see here we got this. This is the dollar. This is the /DX future, and you can see here the dollar was kind of in this sideways. Technically it still is, but to me it came down to a bottom, and then there's this zone around the middle here. Between, let's say, here at 87 and down here at 75 that it was kind of trading in, and it looks like it's broken out of that zone, but now we're coming up into this resistance area. So we would expect the dollar to hit that pretty soon, and then at least have some sort of correction and then resume higher. Now, the reason the dollar is so important, and I've talked about this before, it's the world reserve currency, and so it really impacts a lot of countries and what they can buy. A lot of countries have to buy oil with dollars, things like that. So gold, as the dollar has gone up, you can see gold has gone down. Now, what's interesting is the dollar was up, and look here, gold is up for this week and last week. Dollar's been up several weeks in a row, and it looks like gold has been up several weeks in a row, although not as strong. So, I don't know. To me, it looks like gold wants to go. This could just be a correction from this, this latest rundown. Because the market doesn't just move straight in one direction; it moves, and then it consolidates some of that movement, and then it makes another leg down. So this could just be a consolidation, and we're going to see another leg down. But the gold looks like it. This particular run down looks to me like it could also be over. So there's really a little uncertainty here around gold. You could sell some puts underneath the market and collect some income while you're kind of waiting on it to pick a direction. You could do some things like that. Again, that involves options, which we haven't been talking about. If that's something we do want to talk about, just let me know. We can certainly bring that up. That's really about it. Let me look at the DAX. As our friend in the UK, he would really rather look at the FTSE, but for some reason I can't get data on the FTSE. So the DAX is just kind of chopping. Looks like maybe the DAX is gonna. This looks kind of corrective, and it looks like it chop and might come up and hit this decision point around this 10,370 area, and then a lot of times the next level of support, once it hits its resistance on the high side, would come back to support, which would be off this low here. So we can go ahead and put that on there if the software will cooperate. There we go. So now we would look for, if the DAX did get up into this area, you were in German stocks, you would want to start looking for some short opportunities as the DAX moved its way back down into this area. So that's it for this week, everybody. I want to thank you for coming into to the Middle Class Investor. Tell your friends and family about it. Forward on the YouTube video. You can follow me on Twitter at InvestorClass. That's another way of doing that. But until next week, thanks for coming in. Bye-bye.